And let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a continuation of the range in an ABC expanding flat before then continuation to the upside for higher prices. In this scenario, wave A is then a three-wave structure in a flat ABC over here, looking for a double zigzag in wave B with then an ABC in W, corrective structure in X, and another ABC to the upside in wave Y to finish an expanding flat wave B, which is interesting because we do have some additional resistance here, the golden box between 45.2k and 46k, after which we then expect an impulsive move to the downside in a wave 1, 2, 3, 4, 5, looking for a wave C to the downside, where we have interesting support, also the golden box here, between 38.6k and 39k. After that low of wave C, we then want to see continuation to the upside. Now, what's interesting about this is that if price can take the double top here, we're not looking for the high of a wave 5, the end of an impulse and much lower prices to come, but we look for a fake high, meaning a B expanding flat. So you get a sharp move to the downside in a wave C, that is what you want to see, because usually a wave C in an expanding flat is a very quick, sharp, high volume move to the downside. So of course people may think it's finished now, wave 5 is in, we're going to be looking for much lower prices, but instead you find support, you look for possibilities for a long over here, entry requirements, proof of support, of course, whatever that is, CVD divergences, stochastic, RSI, candlestick patterns, doesn't matter, for then a move back towards the upside. Now for a double zigzag inside this wave B, so that is the WXY I have on my chart, it is not great that wave X went below the 0.7 Fibonacci taken from the low to the high of W. Commonly, for a double zigzag, wave X is finishing above or on top of the 0.7, but you can clearly see we closed candles below the 0.7, lowers the probabilities a little bit for a double zigzag, but in the bullish scenario, one is looking for price to take these highs and then a continuation of the range. In the bearish scenario, you're not going to look for price to take these highs here, and first you're going to be looking for a move towards the downside. So again, it's a continuation of the range. However, this scenario could end more bearish, but at the moment the ABC has a higher probability, also because of the time it currently is taking for this range over here, looking more like a B than a wave 2. However, here we're looking then for a wave A or 1, a 5-wave structure to the downside, 1, 2, 3, 4, 5. Corrective structure in wave 2 or wave B. And then we're looking for either a wave 3 for much lower prices to the downside or a wave C. Now in this scenario, if you take a trend-based fib from the high to the low of A to the current high still of this wave B, then this is your common target area for your wave C, which is between 38.9k and 38.7k in confluence here with the golden target box here for support, so that is nice. And of course for wave 3 you don't want it to hold. If price is going to move to the upside still, finds a little bit of resistance at this blue box here, which is sitting between 43.5k and 44k, that could then be the high of 2 or B, but that also means that this target area for C is going to move a little bit to the upside as well, and will increase the confluence with the golden target box. So that target box here down for support, the golden one, is very, very important support for price in both this being an ABC, but also in the flat shown earlier. Depending on the move to the downside, we can then have probabilities for either a wave C or a potential wave 3, where a wave C can be very fast as well and quite impulsive, usually though very low retracement. So wave 2, for example, goes to the 382 and then continues down instead of the more common target area for wave 2, the 05 to the 786 area, which is better for, let's say, a wave 2 inside a wave 3. So then you have a wave 1, 2, and then you get another 1, 2, deeper retracement for 2, continuation, whereas a wave C can have very shallow retracements to the downside and an impulse down, or a wave C can also have a pattern where you constantly have a move down, range, down, range, down, range, which is something that we have seen over here as well. This over here was an ABC when price was ranging at 25, 26k, and this was also a very slow kind of like rangy C to the downside, where price move down, range down, range down, range. So this is something that we have to keep an eye on if price is continuing towards the downside. Now in the micro bearish scenario, when we look at this structure over here, we are then looking for a potential flat in a wave A, three-wave structure, B, corrective, and then C, impulsive, where preferably the minimum target is to take the high of wave A. Now this high here has been taken. However, this high has not yet been taken. So now we have a double top over here sitting at about 43.450. And also this wave B did not go below the 0.9 Fibonacci taken from the low to the high of A, which for a flat structure and then a 335 would be a minimum requirement. So this also lowers the probabilities for this being a flat structure, which increases the probabilities that this move to the upside here is a wave A or a wave 1, meaning the probabilities are then higher for an ABC or a 1, 2, 3 compared to this being a wave C to the upside and then a continuation to the downside. If we look at the range, then a volume profile taken from the beginning over here to the end of the range gives us the value area high, where price is now at the double top as well, which is high number 1, high number 2, right? We created a double top. It's like a magnet for price, so that is important. And at the low here, we do have the 886 touched, meaning any move towards the upside does have a higher probability of being a wave C or a wave Y, but that can also still, for a wave Y, it can still be an ABC, because a wave Y is a three-wave structure, so you can have a wave A, B, and then a wave C, and then continue towards the downside, where we then also take the double top, hit the blue resistance box here, or even the golden box. Then we're looking for a move down to take the lows here as well, and also again 886 probabilities to let these probabilities play out to then grab this low as well. But at the moment, as you can see, very nicely respected range and volume profile. If we look at the CVD divergences, we have the bigger bullish CVD divergences here, where the target is this high over here, this one, which again has not yet been taken, as we now created a double top. Bit of bullish CVD divergences as price was moving to the upside and now at a high while hitting the value area high of the range. Bit of bearish CVD divergences. These already played out as well. So the CVD divergences very locally are at the moment neutralized, and there's not too much going on here locally. If I quickly refresh the chart, then here you can see lower high on price, higher high on the yellow CVD, but this has already played out, so we have to be patient and see what happens locally. If we then go to the probabilities of the different scenarios, then on the medium time frame it remains unchanged. We are still looking for higher, for price to take these highs over here and move above a 45k. On the low time frame, probabilities are at the moment higher. We continue ranging over here for a while, and I mentioned range, but as mentioned, probabilities at the moment are a bit lower for this to be a wave C compared to this to be a wave A, B, C, or a wave 1, 2, 3. So still looking for upside, still looking for price to take the double top, which is also what I write in the micro over here. The higher probability is to take the double top here locally, reach the blue box that we have, and then could be looking for a bit of a retracement in potentially then a wave B for continuation. But of course, now that I'm home from Riyadh, there will be 3 updates a day again, so I'll see you at 1 p.m. Central European Time. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.